Hi, welcome to the Market Alert for Wednesday, the 22nd of April 2019. So, yesterday we see that Treasury yields hit record lows, stocks slammed as crude carnage spreads. The crude carnage continued yesterday. As you can see here, the meltdown continues as Brent plunges more than 15%, even making headlines up here on the CNBC chart. So oil continuing to see the crude oil price move lower. Let's have a look at the markets, see what they did yesterday. We'll start off with the daily chart of the Dow. You can see prices moving lower under pressure from the drop in crude oil prices. This is minimal. Expected a far bigger drop than this. Well, you would do in ordinary times, but given the markets are so manipulated now with the Fed buying everything, which we'll come to shortly. There's no surprise that prices have held and have the potential to move back to the upside, which we'll just draw in here. We'll just put in some fib retracements. Just get rid of a few of these lines so that you can see. So we're looking in this area here if prices move higher, which means I'll also have to take out the high of yesterday and also the 5-bar moving average as well. In the daily chart for yesterday, in the pre-market session, after recording the market alert, prices headed south. I mentioned this in the alert, and then eventually having dropped significantly. Let's just have a quick look at how far prices actually dropped from recording the market alert. So from the high down to the low. In the pre-market, we saw a drop of 551 points. It's massive. Go back to this time last year, you were lucky if the market moved 60, 70 points in the pre-market session. Now we're seeing moves of 400, 500 without batting an eyelid. So prices opened at 2:30, 9:30 a.m. in New York and moved higher. We then got a retracement here. If we from this high to this low, you'll see. In fact, let me just adjust these settings for a second. Just get rid of a few of these. This one, and this one. So the market from the high to there, you can see, came back to 78, 76% retracement before prices then moved south. And again, once we get to the bottom of the move, from this high to there, you'll see again back to 78. The market then made its way back and managed to pull back 76% or 78% of the high to the low. If I just drag these across, you'll see there where the market stopped, and right at the 200 MA as well. Meanwhile, overnight prices are fairly sideways. Still a huge range though. Each line represents 100 points. That's 250 point range at one point overnight, and now starting to make its way back to the upside. So what I'll be looking for is prices at the DP level. They need to trade above this in order to move higher. They've already closed above the 200 MA, and yesterday's close there. I wanted to look at the implied volatility yesterday. This is the level of risk that the options sellers see, and this moved slightly higher yesterday, up to 44, but we're still in a bit of a sideways move with this currently. So again, not too much concern there. One thing that I forgot to look at, of course, is what economic news we have today, and we don't have any news to shout about. GDP, CPI. Yesterday, the unemployment figures didn't come out bad at all because there is a lag in the UK ones. In the US, they release them weekly, whereas in the UK, they're released monthly. So nothing to show yet, but there will be carnage, and that's for sure in the UK. Well, global employment figures, but nothing to report for yesterday. And this is the highlight of the day. We have another 484 billion added to the printing presses. They must be absolutely smoking. And this is now a bill for coronavirus bill for small business and hospital relief testing. You can't make this stuff up. Like I say, the balance sheet is vertical, which we should have a quick look at as well. So as you can see here, the Fed continue to print, adding to the balance sheet all sorts of assets apart from stocks that we've spoken about. They've got junk bonds, corporate bonds, all sorts being bought up. 6.3 trillion now, or nearly 6.4 trillion there. Up about 285 billion on the previous week. But if we go back to here and look across, you can see there that the total on the balance sheet there was just under $1 trillion way back in 2008. So in the last 10 years, you can see that nearly 7 trillion has been put onto the balance sheet so far. But of course, the bulk of this occurring in the last few weeks there. If I can just get this to come back. For some unknown reason, it won't reset. There you go. So you can see from March the 11th, 4 trillion, 4.3, now 6.3, 2 trillion added within the last month to the Fed's balance sheet. And this is just going to get worse. As I said in a previous market alert, I expect this to be around 9 or 10 by the time we get to the end of the year. So the madness continues. The meltdown in crude oil also continues, and you can see this in the chart here as well. This is a daily chart, and you can see yesterday big drop in the New York oil there, and down on the overnight as well. So we'll keep an eye on this one and see how this one pans out as we go forward as well, because there's a lot of oil around at the moment, and a lot of aeroplanes down, nothing moving, and we have the biggest glut on record, and the prices are really under pressure. But there'll be a good trade back to the upside on this once we start to see the lockdowns start to ease and people start to drive the cars again, and more travel is allowed. So we will end up eventually finding equilibrium in the supply demand once more. But this could be a way down the road, but certainly very interesting to get into these lows. I don't know whether I can get a monthly chart in this. We can. Let's just have a look at this so you can see how bad this is. We go all the way back to 2001 here. You can see how far down we are. So there is definitely the potential there for a buy trade going forward, but we need to see the shakeout continue until we get the lockdowns easing and people returning to some sort of normality, if that should ever happen again in the future. Okay, that will do it for this one. If there is anything else to report today, I'll let you know, but otherwise, as ever, thanks for watching. See you in the next one.